Hey guys, welcome back. In today's video, we are talking about the AMC boom, the $4,000 per share, the Citadel federal summons, and many more in this video. First, we're taking a look at this. The AMC game. Retail buys high, price keeps dropping. Institution scoops up cheap shares. Barcoding was an accident, it was the trigger. A planned transfer from retail to institutions. Big players want their slice of coming box office boom. AMC is set to thrive. So something that we have always known is, of course, apes have continuously bought AMC. Now, recently, what we are seeing is, of course, how institutions want to buy AMC as well. And their goal from the very beginning, whether it was the fact that these institutions want to accumulate AMC or whether it's the short sellers, but the goal from the very beginning has been that they wanted retail to sell so that the institutions can buy up. Now, one of the difficulties in which we faced along the ways, which was their incentive to get retail to sell, was of course dropping the price. Now, this is something that we have all talked about, but it's from different perspectives. Firstly, if you take a look at this, you can see the institutional accumulation for AMC, and you can see the massive increase. We've already talked about the increase in the past, but you can see this candle sticking out and how big this is. So this is the proof that institutions are buying up as much AMC as they possibly can. Now, going to this, right now, for me, it is not a transfer from retail to institutions. The reason why I say that is their goal to make it a transfer from retail to institutions, but the difficulties that they are facing is that retail aren't willing to sell. So the shares that they have been accumulating this whole time have, of course, been synthetic shares. And it's why we've talked about that if these institutions are willing to buy up as much synthetics as they have done, it really just shows how much potential there is for AMC. It really just shows what they believe where AMC will go. And once again, we've talked about this, is why retail stays winning. Now, retail, yes, they've bought high, but they've bought at pretty much every single price point. It's why we're still in this game. It's why AMC is being able to prove its worth because of the fact retail has never given up. And these short sellers are now definitely facing the consequences. If we take a look at this, authorizing more shares reduces risk for AMC and allows for more flexibility, increasing company value. Scarecrows claiming it will kill price falsely assumes that AMC market cap will stay at the 2019 level when AMC was on the verge of bankruptcy. So let's talk about this. And there's two different angles that people will always argue about this. Firstly, is that they are worried that because of the authorization of more shares, it creates dilution. And dilution would typically reduce the market cap, reduce the value of a certain company. Now, in this case, with what we've just talked about, institutions want to buy AMC. This is the exact data you need to see for the demand of AMC. And just like we talked about here, institutions have been trying to scoop up as much shares as possible. And so if you're worried that because of a dilution that AMC price is going to fall, you have to also account for the demand. So yes, the supply has increased, but actually the demand has always been there and been even greater. A lot of people are just only looking at the supply and then not factor in the demand, and we've known that the demand is extremely high. The second thing in which they're worried about, and this is something we've already talked about, but let's just talk about again, is that they are worried that because of these authorizations of new shares, that they are allowing the short sellers to get out. Now, we've already shown with different data why this isn't the case. Firstly, we've already talked about it. We talked about in yesterday's video about how there are 15 billion AMC synthetic shares at least that exists out there. So even if AMC were to create 550 million more, or even if they were to even go beyond that and then dilute it even more and create even more shares, 1 billion shares, it still means that there are still 12, 13 billion shares, 14 billion shares that exist out there. And so I am not worried about even if all of these shares were to go to the short sellers to allow them to cover, because the amount of synthetic shorts that have been created out there is already so big that it can't be saved with just another 550 million more shares. That's accounting for the fact that it all goes to these short sellers. We've already talked about how retail wants to buy, how institutions want to buy, how retail wants to buy. So you can understand why we said that these short sellers aren't even going to get a big portion of those shares. And even if they did, they aren't going to be able to get out. And another factor is you have to look at the fact that how much AMC is exposing threats for these short sellers. We talked about this already, how the AMC drama, and it's just them getting exposed for naked short selling and stealing shareholder value through market manipulation. This is in response to a post, and this is a post we've shown in the past, how AMC drama is exposing risk in $11 trillion world of indexing. So this goes back to what we're saying here with the increasing of more shares, is the fact that AMC is exposing $11 trillion worth of risks. So if you think that 550 million is going to somehow negate this $11 trillion, if you think that 550 million is going to stop and just be able to help this $11 trillion risk, then you are, again, I don't know really what to say, delusional maybe the word, but this is why we've said that we are not worried. And if anything, when you look at how well AMC is able to improve when they are able to raise the cash, if they were to release all 550 million shares, that is then truly something that will put them in a good position. You can even look at, even if AMC were to sell 550 million shares at $2, that will still be over $1 billion. Not to mention, if they do it incrementally or in portions, that's going to make the price go even higher. Now, another thing is AMC's investment and how it's going to grow. Now, we already are looking at this from another filing today from Eric Spot, where he's purchased another 400,000 shares of HYMC. Now, this is, of course, confidence in HYMC. This is, of course, confidence in terms of how he thinks that it's obviously going to grow. Now, HYMC, the reason why we mention it is because the growth in HYMC relates to AMC as well because of our investment in HYMC. And now, just as we said, if AMC were to have more cash, they could have invested more into this and made even more money. And now this, of course, then applies to any future investments as well. And that's why we've said, if AMC were able to get their hands on even more cash, it really puts them in a super good position. And so at times like this is why we're obviously seeing these shorts trying to bring AMC down. You can see AMC almost never makes it to the lit exchange anymore. When 74 to 75% of the volume is pushed off exchange every single day, the stock price isn't getting real price discovery. If you look at the fact that only about 23% of AMC's trades show up on the exchange where the public can actually see them. That means that most buying pressure never reaches the real market, price never reflects true supply and demand, transparency is replaced with shadow trading, the public market becomes a rerun of off-exchange decisions. And so it's why we're looking at the fact that AMC is, of course, dropping 2% today. Now, AMC dropping 2% today, along with the rest of the market, you have to also account for that. Don't just say that AMC dropped 2% today, because if you take a look at Nvidia, Palantir, all of these other stocks, they have also dropped very drastically. But if you take a look at the prospect for AMC in the future, it's entirely different. Not to mention, AMC is dropping because it's seeing 74% in off exchange. These stocks that are dropping, they're not seeing 74%. They're seeing the market average and maybe sometimes even lower, and yet they're dropping that much. And so there's a big difference in the two of them. And if you take a look at another stock that obviously faces the same, Genius Group, you can see, wow, NYSE got to execute one trade with 200 volume that was not blocked from the exchanges by internalization. So if you take a look at this in the orders, you will see one order going through for 200 in NYSE. And so Genius Group, you should already know by now. They obviously have the lawsuit against Virtue and Citadel. And so you should see by now how much dark pool is used and why we talked about that these stocks are, of course, suppressed and manipulated. And then the difficulties that's obviously faced with it, as we're seeing these short sellers being pushed to a corner. The market makers must deliver all the naked shorts sold on Monday before the market opens at 9:30, and no shares available to borrow, where we're looking at, again, the scarcity of these shares. So you can see the struggles that these short sellers are facing right now, and you can understand why the dark pool is going crazy for Genius Group, but the same applies for AMC as well. The difference is we're seeing availability for AMC shares, and that just shows how much synthetic shares they are creating of AMC every single day. So it not only shows demand for short sellers to be able to locate shares, but it also shows how many synthetic shares is being created every single day by these very institutions. Another thing to look at is Ryan Cohen changes the profile picture and Reddit starts posting GME fractals that go to $4,000 per share. So recently there have been so many things going on, and we again should be expecting that as well, because we've seen how the market is reacting right now. We talked about the yen carry trade. We talked about the lack of liquidity. We are going to be talking about how the market has dropped drastically today. So many things are happening. And when these things are happening, it correlates to AMC, it correlates to GME. Because the very illiquidity issues that's happening right now, the very trillions of dollars that are disappearing right now, are the same collaterals being used to suppress AMC and GME. And so that's why we can understand how AMC, how GME can easily go to these prices. Is why we've said that AMC can go to $1,000 easily, even without including a squeeze. When you just talk about how much is suppressed, when you just talk about the real price discovery that AMC should be, it can go into the hundreds, if not the thousands. And then when you factor in the squeeze, when you factor in how much value there is, you understand why we said tens of thousands, if not hundreds of thousands. And you have to remember, this is a company, and we talked about it, that are facing so many different things right now. Citadel market manipulation. So you can see Citadel is being sued by a cancer company for spoofing. They're being sued by an education company for naked shorting Genius Group. They received a subpoena for manipulation from nanotech company. And this is what's happening. So if you think that Citadel isn't suppressing, or if you think that this whole suppression and manipulation is just some made up thing that the investors are saying, well, take a look at it again, because these are being filed by actual companies. And so we really understand what's going on. And another thing is that you can see federal summon issued to Citadel in Genius Group lawsuit. Now, this isn't something that is extremely major. Like we've said, we need to see it go furthermore. Normally, these take a very, very long time. But the very fact we are seeing progression is good. But this is just to add on to what we talked about with how we're looking at the short sellers of AMC to be facing pressures from other areas, and why it obviously matters to us, because this very pressure will also relate to AMC. You have to understand that their margins are, of course, mutual in all. So if they're facing margin pressure because of Genius Group, in which we're seeing how the margin requirements are now in 360%, it also means that there will be less margin they can use to suppress AMC, to suppress GME. Now, of course, the position that they have built up in Genius Group is nowhere near as big as AMC and GME, but it doesn't change from the fact that they are still facing struggles from that. Now we're looking at the reverse repo, $6.5 billion. Now, bear in mind, this isn't now the end of the world. One of the things we talked about on this channel is how we want to see the reverse repo go to zero. We saw it below $1 billion, then we saw it go back up to 1.1, and now we're seeing that 6.5. Now, does this mean that suddenly the shorts get another lifeline? No. Like we've said, wherever the reverse repo go up or down, it is not a big thing. And if anything, when we see the reverse repo suddenly increase from 1 billion to 6.5 billion, it shows and proves our point of the fact that they are in need of liquidity. They are in need of money. Bear in mind, these banks, these institutions, they don't want reverse repo money. They want other ways of subsidiary, because it then makes them look strong. By taking money from the reverse repo, it makes them look weak. We talked about it in yesterday's video. So the very fact that the reverse repo did actually go up, and that these banks and institutions actually are using it, shows the fact that they're weak, shows the fact that they are struggling with liquidity. And so it isn't a matter of going from 1 billion to 6.5 and the sudden means the shorts are alive again. No, it very fact shows that they are in need of liquidity. And the only time where we talk about how they won't be able to get help is if the reverse repo goes to zero. And that means that there is no more money being injected in the system, and these short sellers will have to survive on their own, whether that's with selling their positions, wherever that's posting up more of their assets, wherever that's to get help from anywhere else. That's up to them, obviously, but that's when we know that they're going to be struggling the most. Now, let's take a look at why I said the market went turmoil today. If you take a look in the market today, very start, we saw Nvidia up 4%, even 5% at one point, Apple 2.19, Google 3.99. The reason for that was because of Nvidia's earnings yesterday. People react very positively because they beat earnings. However, it doesn't stop there, because at the end of the day, this is what we saw. Nvidia down 2%, and you see red throughout the market. And if you want to see what really happened, just in $1 trillion was wiped out from the US stock market. $120 billion wiped out from the crypto market today. You can see Nvidia down 3%, Microsoft down 2%, Bitcoin down 3%, Ethereum down 3.7%. This is what happened in the market today. So this is something that you really have to factor in, is that we saw trillion of dollars disappearing today. And remember, these $1 trillion value that were used as collaterals that was able to be used against AMC, against GME, will inevitably be transferred to us when it can't be capped anymore, when it can't be able, when the whole market collapses and we're seeing even more money being disappearing. That's when you realize that this money is going to be transferred to one place, and that place is, of course, to the retail. And so is why we've said that we can easily see $4,000 per share. Is why we talked about that these shorts are, of course, struggling. But it doesn't stop there. Because yes, we saw the market drop $1 trillion. We saw crypto drop 120 billion. But you also have to pay attention to what's happening on the other side of the world, where how Japan might trigger the next global market crash. We're seeing the 20-year bond yield just hit all-time highs. Tokyo's launching a 110 billion stimulus package, where this whole thing right now is mirroring 2018 when bond spikes crashed equities. Now, we've already talked about the yen carry trade. And the reason why we mentioned this is not only is a market crash going to affect all of these collaterals, but the reason why we mentioned about how the Japan global market crash is because of the yen carry trade. One of the biggest companies it will affect is Citadel because of their exposure within these trades. And so the market dropping, disappearing trillions of collaterals, is going to show how these short sellers are going to struggle. But not only that, directly, some of the companies that you can really pinpoint out are going to be companies like Citadel. And so it's why we've said that Citadel are affected in so many different ways, whether it's with all of these lawsuits that they're facing, or whether it's the fact that liquidity is dropping, or whether it's the fact that the exposure to these trades are going to blow them up. They are all showing signs of desperation right now. Now, we talked about the whole market dropping. One of the biggest eyes to focus on is, of course, Nvidia. And you take a look at this, Nvidia earnings add to concern that Nvidia's incredible growth is built on credits, not cash. So the reason why we pay attention to this is because ultimately what's carrying the market right now is Nvidia. So if we see Nvidia fail, we're going to likely to be seeing the whole market fail as well. And right now it seems like Nvidia is showing that because of the fact that their growth is not built on something that is sustainable. When you take a look at this, investors took time to go through Nvidia earnings report. While B is enough to trigger trading algorithms FOMO, I believe investors are finally realizing how the numbers tell a different story. And just like we've said, Nvidia after earnings, we saw it go up 5%. We saw it gap up 5%. But then after that, we saw it drop 3%. And the reason for that is because potentially one of the biggest play, the big announcement about the $100 billion partnership between Nvidia and OpenAI back in September that triggered several $100 billion gains in Nvidia's market cap, it apparently not only has a letter of intent not being formalized into a legally binding agreement after 2 months, but there is a chance that this might never even happen. And so if you want to see why we're seeing struggles, this is why. And so when you take a look at Michael Burry's position in Nvidia in Palantir, it's starting to make a lot of sense. And it's why we said the market could be crashing. As always, none of this is financial advice, so do take class and consult. Make sure to do your own due diligence and research, and I'll catch you guys next time.